Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Jiangsu Expressway Company Limited annual report. Jiangsu Expressway Company Limited offers a diverse range of businesses and services. At the core of its operations are toll roads and bridges, which it invests in, constructs, operates, and manages across China. In addition to these primary activities, the company provides various ancillary services along highways. These services include gas stations, catering facilities, and retail businesses within expressway service areas. The company also engages in investment services, real estate development and management, and the sale of electricity. Furthermore, it is involved in advertising, operating service areas, clean energy power generation, and agriculture business. Jiangsu Expressway Company Limited market capitalization of 53 billion is significantly larger than the average industry peer of roughly 5 billion. This shows that Jiangsu Expressway Company Limited holds a significant advantage in their industry. Jiangsu Expressway Company Limited trades at a higher price-to-earnings ratio of 10 times and a higher price-to-book ratio of 1.12 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 43% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 5.13%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline for the company can be identified from various segments of its business operations. Revenue growth was primarily driven by principal activities revenue, which increased by 44.3%, and other operating activities revenue, which rose by 76.5%. Additionally, revenue from contracts with customers also saw a significant increase of 45.6%. Advertising and others income experienced a substantial growth of 93.8%. On the other hand, some segments witnessed declines in revenue. Toll road income decreased by 0.4%, while ancillary services income dropped by 25.2%. Real estate business operating profit declined by 33%. Interest income from deposits also saw decreases in certain subsidiaries. The company's overall revenue growth rate was 45.6%, indicating a positive trend in its revenue generation. However, the mixed trends and unclear data in some segments, such as sales of electricity and advertising, highlight the need for further analysis to understand these fluctuations. The changes in net income and profit margins varied across different companies and segments. While some companies, such as Zidai Company, experienced significant increases in operating income, others like Danjin Company saw a decrease. At the industry-wide level, net income increased by 109.9% from 2024 to 2025, indicating an overall improvement in financial performance. However, there were also instances of decreases in net income, particularly among certain companies such as Jiangsu Expressway and Yicheng Company. Profit margins showed a mix of increases and decreases across different segments, with some expressways like Guangjing Expressway and Shanghai-Nanjing Expressway experiencing an increase in operating profit margin. The notable exceptions to these trends highlight the diversity of financial performance within the industry. Companies like Rudong Company saw substantial increases in net income, while others experienced significant declines. These variations suggest that factors such as company-specific strategies, market conditions, and operational efficiency played a crucial role in determining net income and profit margins. The company has consistently generated positive operating cash flow over the years. In 2022, it reported a net cash inflow of $5.7 billion, which increased by 29.6% to $7.4 billion in 2023. This trend continued into 2024 and 2025, with the company reporting a net cash inflow of RMB 6.316 billion and RMB 6.762 billion respectively. The increase from 2024 to 2025 was 7.05%, indicating a steady growth in operating cash flow. These figures confirm that the company is generating positive operating cash flow, demonstrating its ability to manage its finances effectively and generate sufficient funds to support its operations. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, there was a decrease in total gearing ratio by 1.71 percentage points and net gearing ratio by 5.37 percentage points, page 38. Additionally, total liabilities decreased by 1.71% year-on-year, page 41, and total borrowings decreased by approximately RMB 862,649,890, page 42. However, a closer look at the data reveals that there was an increase in total debt from 2024 to 2025 by approximately 5.6%, from RMB 38 billion, 520,305,320.24 to RMB 43 billion, 956,438,671.08, page 316. Furthermore, lease liabilities assumed by the company have increased significantly from RMB 2,772,095.61 in 2024 to RMB 18,661,654.7 in 2025, page 327. Regarding interest expenses, there was an initial decrease due to lower consolidated borrowing rate of interest-bearing debt charged to interest, page 29, and proactive financing measures, page 36. However, the data also shows that interest expenses have increased significantly from RMB 963.48 billion in 2024 to RMB 838.99 billion in 2025, page 345, with a notable increase of plus 124,488,625.69, page 226. The performance of various regions and segments within the company's operations has been notable. In terms of success, road and bridge operations have been a highlight, with several projects demonstrating strong progress. The Ningyan-Yangtze River Bridge North Connection Project was successfully opened to traffic, while the Jiangsu Expressway Zuyan-Hubziwu Hub Section Expansion Project reached completion. Additionally, forward-looking research and optimization studies were conducted on the Jiangsu section of the Shanghai-Nanjing-Huning Expressway. These achievements reflect the company's core business strengths in road and bridge operations. However, not all regions have performed equally well. The Danyang-Jintan Project and Zidai Project are experiencing slower progress, with construction investments lagging behind total project investments. Despite this, both projects are expected to be completed by 2028. Management's outlook on Bank of Jiangsu's future development. According to management, Bank of Jiangsu is poised for future growth and value creation. They are confident in the bank's development prospects, which will lead to improved fund utilization efficiency, expanded profitability channels, and greater value for shareholders. To achieve this, management is focusing on high-quality development and core business expansion. A key aspect of their strategy is digital transformation, with investments in construction receiving up to 40% subsidy. They are also establishing a new industrial structure that prioritizes green, low-carbon practices and deepening digital and intelligent transformation. Furthermore, management is cultivating a transportation plus ecosystem and forging first-mover advantages in environmental, social, and governance (ESG) initiatives. In addition to these strategic efforts, management is prioritizing road safety, promoting win-win cooperation, and contributing to society through public welfare activities. They have also successfully utilized proceeds from the medium-term note to invest in science and technology innovation, and acquired a 100% equity stake in Jiangsu Yunshan Green Energy Investment Holding Company Limited. Overall, management strategy for Bank of Jiangsu is centered around sustainable growth, digital transformation, and responsible business practices. By focusing on these areas, they aim to create long-term value for shareholders while contributing positively to society. The company has a history of paying dividends to its shareholders. According to the financial records, a total cash dividend of RM billion 468,496,275 was distributed, with each share receiving a dividend of RMB 0.49. This indicates that the company has prioritized returning value to its investors through dividend payments. That concludes the financial summary for Jiangsu Expressway Company Limited. Feel free to comment below, and I will be happy to answer them when possible.